Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna. Welcome to the Payment Shed podcast. Today we are very fortunate to be joined by the fantastic Leda Glyptis. Leda is a founder, author, and all-round general fintech commentator, and we are thrilled to have you here today. Leda, please introduce yourself. Tell us a little bit about what first drew you into financial services and banking as a sector.
Well, thank you for having me, first of all. I was very excited coming here, which is a nice feeling on a Friday. Narrator's voice. We're recording this on a Friday, but you're probably not listening to this on a Friday. What drew me into finance? It was accident, to be honest with you. I never, ever wanted to be a banker. And if you had asked me when I was a university student, I would have been like, anything but that. But I fell into it and much to my horror discovered that I both liked it and was good at it and found myself in banking entirely by accident. And after a couple of years of winging it, like most people do, my then boss was moving to another bank and said, I'd like to take you with me. And I said, I have a confession to make. I'm mostly making it up as I go along. I have no idea what's going on half the time. And he was like, well, you follow me into this operations role with a very, very heavy focus on technology and process redesign. You're going to learn everything you need to know and quite a lot more besides. And he was right. So I found myself doing that for a few years, which meant I was at the right spot when the fintech wave started and haven't looked back since.
Very good. And what were the biggest lessons that you think you learned working inside those big banks over the years?
I think the first lesson's a good one. The second one, not so good. You want the happy one first?
Go for it.
Yeah, I'll go happy
one first. The first one is that very often as we would go through pieces of work, there would be people at the coalface, people who would do the doing, who would have very good ideas, sometimes very practical, small, but impactful, sometimes huge and strategic. And they would hold themselves back thinking somebody higher up the food chain, higher up the pay scale than me will have probably thought of this and dismissed it for good reason. And I saw so many times people holding themselves back on the assumption that my betters, my seniors, will have thought of this thing. There is a reason why we're not doing it. The realization that they mostly haven't, largely because they're doing other things and also because usually they haven't done your job. They don't know what you're facing into. It was a very liberating realization. It actually accelerated quite a lot of what I was doing because I have a personality that, as a friend of mine puts it, goes around poking things to see if they go boing. And they usually do go boing. So I poke again. So for me, that was liberating. The fact that the worst that can happen is I will learn why we don't do it. Yeah. And that was a massive realization. And I wish we instilled it more in people and had a mechanism that doesn't involve bravery to be filtering through these things. The second thing is the unhappy piece. And so when I started my career, and I don't know if you guys had the same as you were going through, I firmly believed that what stood between my big organization and not getting in our own way was knowledge. Like if we actually understand how this particular technology works, if we understand how this methodology works, if we understand how soul-crushing some of our policies are for our teams, we will do better. I believed that fully when I started my career. I don't anymore. I know that's not what's holding us back. And that is depressing. And these two realizations often go hand in hand.
So you mentioned there kind of what you thought when you were doing the roles. What do you think the lessons you learned from doing them roles and have kind of, you mentioned there about asking the questions and doing the pointing. What do you think the lessons you learned from doing that or not doing that in certain circumstances?
So I'm the kind of person who does do that. So the lesson learned is that actually you can get a lot further than you originally fear. Sometimes you get a lot further than the organization you're in was prepared for, and then you have some comical conversations going, this succeeded more than we anticipated. Roll it back now because the organization isn't ready for it. But I think from a personal career perspective, you realize that actually the boundaries you assume are there are not. But the second learning is exactly the second piece of that, which is you have to take the organization with you, and the maturity of systems, processes, but also people's appetite for change isn't yours to shift.
Mm.
So the biggest learning actually is that you go in to do a big systems implementation or to implement a strategy, but the only conversation that matters is getting your senior stakeholders, your shareholders, your executive team around the table and having an honest conversation on, do we have the stomach for this? And if not, do we have the honesty to bring our strategy back to whatever we have the stomach to execute? Do I have time to tell you a story?
Go
Yeah,
for
of
it.
course.
Yeah.
So I did a piece of work with an insurance company a few years back. Everything you're thinking of, right? It was a room of middle-aged men in suits. It looked like they were wearing the same suit, although I'm sure they were. And I walked in, I was like, oops. And it was a digital strategy offsite we were doing. And we were together for quite a long time. They were committed to a process that entailed actually really staying with the questions, having experts in the room that could explain the stuff that would normally be like, oh, let's pick up in a few weeks once we've looked into it. So it was a really committed set of sessions. We'd put a lot of work into it. It was exhausting. And we got towards the end of the week and the chairman of the board stood up and said, this has been eye-opening. And I think I speak on behalf of everyone when I say we don't have the stomach to do any of what you've put in front of us. I was crushed. I don't think I've ever been this close to tears in a meeting room before. But he didn't stop there. He said, so learning what we've learned and knowing what we are, what do we have the stomach for? And we designed a strategy that if you had asked me then, and it was a long time ago and I was a lot younger and a lot hungrier, they came up with a strategy that wasn't particularly exciting, but they've executed. And that's the big thing. They were honest about that appetite. And that's when I got that learning. It was not even that day. It wasn't the year after. It was several years later when every time we had a check-in, they had actually met their targets, gotten their sea legs, and the next iteration of the strategy was more ambitious. And again, they executed because they didn't go in with a futurist saying, let's move to Mars. They actually started from that, do we have the stomach to do this question? And at the time I was crushed, but now I look back and think, biggest lesson ever. That's what it needs to be like.
That's an interesting one as well, because, segue into the next question around the point at which you pulled the handbrake and went, I've had enough being on this side of the fence and I'm going to step out and become a challenger voice in the kind of banking sector. But there are obviously positives you take from that story, but I guess there were several of those that maybe didn't go in such a positive way. So what was the trigger point where you went, I need to get on the other side of the fence and I need to talk about doing things better in this space?
So I've crossed the Rubicon twice because I was a banker for a very long time. And I started writing and speaking as therapy, to be honest with you. And it was back then when you had to come with a caveat of my company does not condone any of the craziness I say here. And I found myself crossing from traditional banking with all the legacy to challenger players in the core banking space, in my case, as a challenge to myself more than anything, to put my money where my mouth was. It's like, okay, you're constantly constrained by policy and governance and legacy. Move over to the other side with a blank sheet of paper and do it. And undeniably that comes with a whole host of other challenges. It's a lot of the constraints you had are the shackles are removed and it's liberating, but you have new problems. And some you anticipate and some you don't, as always. The crossing over that you talk about, going from a full-time role to more of a sort of portfolio career I have now, which is a combination of advisory and writing, commenting, speaking, and working with companies of all sizes at their executive and board level. It was a personal choice for quality of life more than anything. And by that, I don't mean I wanted to work less and sit on the beach. I'm actually working longer days now than I ever did before. What I don't have to spend any time or mental energy on is politics.
Yeah.
Because the reality is, even the smallest organizations, when they get to a tipping point, which is about 30 people, start having politics. They have internal politics. They have egos. We're in finance, so we tend to hire a particular type of person, and we all know what happens around these people. So in any organization, no matter what work you do, a big chunk of your time is spent managing things that just stop you from going backwards. People's emotional reactions, sometimes very narcissistic reactions to power struggles. I don't want to do that anymore.
It resonates so much. I mean, we've gone corporate startup in our careers in different places, but we joke about this a lot. You know, the politics is very much still there. It's just it presents in a different way, but it does still exist. I know, fascinating insight.
And I think sometimes as well, you have certain leaders that take you to 20 employees, but then you may need a different leader to take you to 50 employees and a different leader. And you also can have fantastic leaders that can adapt as the business grows. But sometimes to be able to push that business forward, you need to bring in new blood.
100%.
It doesn't mean that the person at the top needs to leave the role, but what's best for them and best for the business by them doing that
100%.
role.
100%. And actually, so there's a chap called Christian Nentrich. I don't know if you've met him before. Actually, his office was around the corner. I interviewed him for my latest book, and he agrees with you 100%. He says that chances are the person who founded the company isn't the right person to lead it as it scales. But even if it is you, the version of you that started isn't the right version to continue. You need to change. And I guess to your earlier question, I gave myself permission to ask myself, what do I want now out of all of this? And that has been my latest iteration. And, you know, I'm old enough to know better, but young enough to probably make a change again in a few years. So watch this space.
Look, you mentioned there around legacy banks and around challenges, and we look at Starling, Monzo, Revolut. They've kind of reshaped the UX journey, right? What do you think the impact has been on legacy banks? Do you think they're fighting back enough?
So when I was a banker, the watchword was disintermediation, right? And we were concerned that the fintech space would provide a like-for-like challenger for the areas of activity that made us our money, right? That's not at all what happened. And the technologies and the businesses that have come in have completely changed everything, including that. But there hasn't been a like-for-like challenge. So you're absolutely right that when the challengers, the Monzos, the Starlings, the Revoluts came out, UX was the first thing people looked at. And that is fairly easy to copy. Like, it's not a defensible moat. Then it was unit economics and a lower cost base, which is a much harder thing to replicate. But I would, to the second part of your question, I would argue that traditional banks in the consumer space are looking at the challengers and going, well, you haven't reached the sort of scale that scares me yet. So I'm not going to be replicating your unit economics discipline because you haven't quite made it work yet. But if you speak to the founders of those banks, the joke is always, well, we never said how long it would take. Nobody expected it to be an overnight thing. And as you're seeing them tipping into profitability, it may be too late to do the unit economics part, especially as you have organizations going, leave that for now, because I have to think about what AI is doing to my user interfaces anyway across the board.
So what do you see as the kind of key advantages then, I guess, that the legacy banks struggle to match? And then beyond that, on the flip side, you know, what are the strengths that those incumbents have? You know, there must be a sort of strengths and weakness play that you would break down between the two parties.
100%. So let me start with the strengths of the incumbents, because I've never subscribed to the view of beating them up. They're scaled, they're diversified, and they have money. They have money, right? And I don't just mean they have your money. I mean, they have money to invest in whatever it is they believe needs to be invested in anger. But that scale also means that they can absorb their own delays and their own prevarication sometimes. That scale also means that there is an opportunity to protect certain businesses should they want to. Now, I hesitate because, of course, we were all around when names that you never thought would go under went under. I remember going up to work in the in One Canada Square, and Bear Stearns was listed on the building's tenants and leaving the office that day, and they were no longer there. So, and it was not funny at all if you were working for Bear Stearns at the time. But so we have seen big names collapse. But that scale is important, and it's particularly important because consumer banking has historically not been particularly profitable, and so those big banks have made it profitable on the whole, on the round, as part of a bigger set of capabilities. So the challengers come in to make possibly the hardest bit of banking profitable. They're trying to do it with a consumer-centric view, but the business model is exactly the same. And I know that some of the founders will not like me saying that, but it is. The unit economics are different, but how it works is exactly the same. So what it needs is scale. And that scale is very hard to achieve without doing some of the traditional stuff. Like, we're seeing that the challengers are actually leaning into profitability when they bring lending into the mix, because that's how banking works. So I think the gulf between the two is not as stark and wide as it was when it started, when UX was the thing we were all looking at. But I think we will actually end up having a conversation around, what are you trying to do? How are you trying to do it? And do you have the right tech stack to do it sensibly, reliably, robustly, and at a sensible cost? I actually think the challengers will come into their own in that space, because they do. They have cleaner estates, more scalable, and if they've done everything they said they're doing, cheaper to run.
I think the way the thing the legacy providers should be more scared of is not just the UI and the UX anymore. For me, the value-added services that they're adding, which is also adding to their bottom line, they're delivering in such a clean and easy way. Embedded finance, the lending element is one part of it, but there's premium card offerings that we see in that market. Other quirky features, phone insurance, whatever it might be, travel insurance, these value-added service products, they're so easy just to flick on and off within those banking apps. It can't be that difficult for the legacy providers to build similar solutions, but they just seem fundamentally flawed in the way they deliver a lot of those products to market.
Are they generally capable of transformation, though?
Well, so I find myself drawn into that discussion a lot, and I think the answer is manifold. The first piece that has to be said is that it's much easier to deliver a solution on a tech stack designed for adaptability. I have a client who has a particular system, non-critical, admittedly, but a system that it's on its 32nd year of code freeze. So you can't change the code base. Now, I doubt there's anyone who knows how to change it. There's the vast majority of banks will have systems that are older than me. I have a challenge with a friend that I will talk about mainframes at least once a day. So here it is. We're building digital capabilities alongside or sometimes on top of technology of a different era. So if you're trying to create an operationally resilient and risk managed solution that needs to use a customer master from the 70s, then you have a much more complicated job at hand than if you're building it on a cloud native core that can just spin things up. So problem number one is that the longer we carry this legacy, the more complicated everything becomes. The second is muscle memory, right? You know how when you move house, the first day you leave the office, you're halfway to your old house before you realize that's not where you live anymore. I exaggerate slightly, but people in big organizations are trained to have workarounds for the things that they know don't work well. Whereas in an organization that was designed to not have any of that, you go in a straight line. But then you create situations, I'll go back to what we said right at the beginning. People are so used to going in a zigzaggy way to get from A to B that they might not even ask, is there a door there? Because it would be so convenient if we had a door there and we could walk in a straight line. So everyone is capable of change. What man made, man can unmake, but it's infinitely more complicated. You need to, if you say, okay, what we're going to do, I mean, we're allowed to name individuals. Look at the HSBC Zing example, right? I personally don't think it's an example of them failing to innovate. I think it's a testament to the fact that they looked at what Wise were doing and said, oh, that looks nice. And then the steps that needed to be taken internally meant that by the time they hit the market, they were so late.
Yeah. We see this quite a lot, though, with legacy providers, right? Is they want to get to market parity and beyond. So they sort out a project to try and get to market parity. And by the time they get there, they're already 2, 3, 4 years behind where the innovators already are, because they just need to catch up quicker, unfortunately.
And then what happens is there's someone like me in that bank who'll go, right, let's talk about all the reasons why we didn't make it on time. Let's talk about our procurement policy. Let's talk about our onboarding policy. Let's talk about testing. The fact that I worked with a bank a few years back where we had release cycles that we had fought to get them down to 4 weeks, but our testing schedule had to be locked in a year in advance. Right?
Make it make sense.
So make it make sense. But also, once we've had a project that didn't deliver as we had all dreamed and wished for, let's sit down and talk about all the systemic factors that got in the way so that we don't repeat the same mistakes next time. But you know what happens? Everyone has to move to the next project. So you go into the next project and your testing cycle is exactly the same. And your procurement requirements are... So all of the things that become impediments, you just carry between projects.
The Payment Shed podcast is proudly sponsored by Tammy AI, the market intelligence and lead generation platform built for sales and marketing teams who want precision, not guesswork. Tammy helps businesses identify their best fit prospects, gain deep market insights, and boost revenue growth. And it really has become the go-to solution for the payments and fintech industries. Both Justin and I have used the tool in previous organizations that we've been in, and we really can't recommend it highly enough. There's a link in the bio to click on the Tammy website and find out more about their product. You really won't regret it.
No, it's really interesting. And I want to move on to the cultural side of this as well. But just before I do that, on the Zing note, the point you made before about the huge, banks of money that these legacy providers have, it was a huge loss on paper, but actually for someone like HSBC, it was nothing really, and it was worth the risk. But then that segues maybe into this cultural question. We're going to ask you around, we've talked about the technology side of things, the cultural difference between those challengers, those neobanks and the legacy providers. And Zing's maybe an example of trying to create this trendy brand, and then people go, well, it's still HSBC that sits behind it, right? Do you think the big banks are struggling culturally to kind of move forward? I mean, it's quite an open-ended question, I appreciate.
And it's a good question. And look, I am an HSBC customer. I'm an everyone customer. I have it's almost like a banking advert if you open my wallet, because I'm curious, and I bank with everyone for my education. So I am, among other things, an HSBC customer, and it was very jarring for me that I had to onboard as a new customer. So of course, because I know how the thing works in the background, I was like, that you haven't set up your identity asset properly. Now, I had a similar conversation with one of the neobanks, with a hapless poor person who was at the other end of the phone. What was different is that, and maybe I shouldn't be naming HSBC here, but what happened with HSBC was nothing, right? Whoever I spoke to was like, yeah, I don't know. I'm just a phone center
I don't know.
employee. I don't know, lady. What do you want from me? Whereas on the other side, the challenger bank, I got a call from a very senior person going, what are you doing terrorizing my team? Yes, it's fair question. It is how we set up ABC, and we have a plan to change it. And I appreciate the question. And I was like, you know what? I appreciate the fact that the question reached you, because that is a process thing and a culture thing, and the two coexist. So a very long-winded way to coming back to your question. Culture is an extremely hard thing to get right, because, again, I quote from my book, I was talking to the founders of Infuse for my last book, and they were saying they were very mindful of culture, but it was very artificial, because it's like, okay, it's the two of us now. Do we need to talk about culture? And where there's 5 of us, do we need to talk about culture? But when there's 15, is it too late? So it is a trial and error thing, and there's a lot of habitual culture forming things that happen inside a big organization that get in the way of what you want, and they're not intentional. But I think for me the biggest thing is there isn't a muscle for talking about the real reason why things didn't work. One of my former colleagues used to call it the closet of shame. Everything goes in the closet of shame. We never speak of it again, which means we don't learn. There is a danger that as the challengers get bigger and as they bring grown-ups, in quotation marks always, in the room, and we're seeing those more seasoned bankers coming in, there is a danger that some of that formality will come in. But I do think that the power of my question, and it was genuinely a question, reaching the top of that food chain, that was clever. Now, it could be because that person Googled me to see who I was and whether I was a journalist and going, oh, we should probably give this woman an answer. But the fact that it reached them says a lot about their culture. And I have no idea if I've answered your question now because I've gone in 10 different directions.
So how can big banks try to mirror that kind of culture and break down them silos of a leader of a legacy bank calling you?
I don't think you can. Isn't that terrible? I don't think you can. I think it's, you can't start. You know that thing where you ask someone for directions and they go, if that's where you're going, I wouldn't start from here. It's like, thanks.
Yeah.
If you are an HSBC, starting from where you are and all the strength that comes with it, the pride of working for a brand like that, the absolute belief that you're an intrinsic part of the global economy, there's actually a lot to be celebrated. And big banks are really terrible at that. I remember when I worked for BNY Mellon then, our thing was who's helping you? We're here to power big projects, investment success, government infrastructure. That's our job. We're here to power that. It trickled down to everyone who worked there. So I think big banks are missing a trick. There is an element of I remember we were at the time at BNY, it was the top. BNY had stepped in to support the Federal Reserve part of the deal of mortgage safety for the American market. We weren't in America. You know how proud we were of that? So I think there's a trick missed in, look, yes, it's a big organization. There are a lot of controls, but look at what we're a part of. And I think that celebration is important. The second bit is the closet of shame needs to go. Like, you will never be just like those guys, but you can be better than you are today. And you are seeing quite a lot of the big organizations bringing people in who will smash through some of that stuff. If you've had 3 projects that were all late for the same reason, talk about the reason. It's that simple.
Do you think those big banks underestimate the value in customer trust to the same level of the neobanks? Obviously, they have to really fight for that share of wallet, the neobanks out there. But for me, and I've talked about this on other episodes we've done, I still have my mortgage coming out of my CMA9 traditional bank. And there is an innate thing, even working in financial services, where the back of my mind still says to me, I need my savings there. I need my mortgage coming out. And I know it's complete nonsense in terms of the protections that I get, but that for me is a strength for those challenger banks, and they should market that and lean into that kind of legacy trust that exists. But I don't know if you feel they do that.
I mean, look at what Chase did, right? They're actually the best of both worlds in some ways, because you have that legacy name and the trust that goes with it, even though it's a completely separate business. And they tried to pick the best of all worlds in terms of how they wanted to set up their business, the technology, and all the rest of it. I think when you're the size of an HSBC or a Barclays, each individual customer matters less. Like, they would never say that, and I don't think that the people who do the work think that. But the numbers are such that the individuals matter less. But then the flip side is that scale is how you succeed. So if you remember the early years of Revolut, one of the best things about them was their support function, because you spoke to a real person within seconds. It was amazing. It didn't scale. It couldn't scale. So I think that slightly more impersonal approach of a big bank isn't because they don't care. It's because with scale comes some automation, I think the question marks that we need to think about is, nobody has solved this yet. The challengers haven't made the business side work fully. The incumbents haven't made the servicing side work fully. It's a work in progress. They can definitely learn from each other. I think we're past the window of acquisitions, really, because some of the challengers have gotten too expensive. But we're not past the window of rethinking how we do certain things. I think we're going to see a lot more change, because the economics of some of the challengers are not sustainable. And the technological legacy operational risk complexity of some of the incumbents is not sustainable. So like I'm going to be employed forever, because like the things that I've been talking about for the last 20 years have changed a little bit, but not that dramatically.
And kind of bring this back down to yourself, obviously author, exec. I mean, everybody wants to be speaking to you, right? What inspired you to kind of get writing in the first place? You mentioned about getting your story out there, but kind of what was that deep inside you that got you going?
So I started writing out of sheer frustration. I am I'm a bit of a sponge of other people's emotions. So if you had a really frustrating day at work with all the politics and all the drama, I would go back and I'd be like, "Arr." But I am inherently a Pollyanna. I like finding actionable, positive twists to everything. So I started writing for therapy. I had a really frustrating day and everything went wrong and everyone was an idiot. But why? And what can we do differently? And so I started writing to find that sanity, that positivity, but also the commonality in the experience. And at first I would publish here and there, like Secret Squirrel. I wouldn't draw attention to it. And a few years in, I was busted by my boss. And he was like, look, obviously you can't write under the company name, but like you're more than welcome to do more of this and not be as secret squirrely. And then as I was moving to the Gulf, I had been, like a few years writing here and there. Tanya Andresian of Fintech Future said, well, let's do this. Let's make it a weekly column. I was like, who will want to read this every week? She was like, well, you'll be surprised. People need to feel that they're not alone. You're not the only one in this.
Relatable, right?
And it sort of went from there because the community of people going, me too. That's the wrong phrase, but you know what I mean? Also here, created a dialogue that pushed me to broaden the scope. And then the book was, the first book was Tanya again, saying, it's time now to go to the next level of depth and complexity on this.
And what's been the most surprising feedback that you've received going on that journey from the articles to the 2 books that you've got now?
So my favorite thing is that people have never met before, who've been reading my stuff for years, will barrel down the street or at a conference and hug me going, I feel like I know you. And that feels amazing. It's a bit confusing sometimes because like, wait, have we met? I don't think I know you. But that is so valuable. That has been, I can't stop grinning. It's such a beautiful thing to have. The most surprising thing is that you will very occasionally, and like I've been writing now for about just over 10 years, you will occasionally get messages that are so deeply unexpected. I was saying, I needed to read your piece because I felt seen, or I'm going through something else in my life. I wrote a piece about the immigrant experience from where I sit, and I had a lot of people reaching out privately going, thank you for saying words I needed to say or I needed to have. But I had one person years ago who, it was a piece about API governance. It wasn't, because some of my pieces are about leadership, some are really dry. It was about API governance. But there was a turn of phrase in there, and I got a message from a chap on LinkedIn saying, I was contemplating suicide. And this turn of phrase made me think about things and like, you sort of saved my life. And I was like,
Whoa.
I can't carry that.
Heavy.
That's a lot. I mean, I said to them at the time, and I believe it, that like when you're ready, the lesson finds the student, and you would be in an empty room and you would find that inspiration. So I will take no credit at all. But it is a very powerful reminder that we put stuff out there, and the law of unintended consequences is very, very strong. And when you write as chaotically as I do, because I don't really follow a particularly formal structure, it resonates with people in really unexpected ways. And that's amazing.
Do you think every leader should be writing, sharing their ideas out loud, or like you meant, secret squirrel to themselves to kind of get that through that?
So I have had a very intense debate back and forth with someone recently about that, because I think it's difficult to say there is a thing that everyone should do. And I have friends who are among the smartest people I know. If you ask them to write, they will never express a full thought again. Mm-hmm. I think every leader should give themselves space to formulate their thoughts in a way that works for them. So one of my very good friends needs what he calls an accountability buddy. He does his best thinking in dialogue. And when somebody's pushing him to get to the next step, but then we'll call him 2 weeks later and say, did you do the thing? Writing works for me, but it might not work for everyone. So I think I know that there is a feeling out there that like, unless you've written a book, are you even an important thinker in the space? Yes, you are. You absolutely are. It doesn't matter what form of what canvas works for you. Every leader should allow themselves space for thoughts to play out, not in the constant grind of a meeting, but what that looks like, I don't know. And it doesn't matter. And it might not have an output. Like one of the people I interviewed for my second book was saying that he goes on very long bike rides to think through things. And when he gets to the other end, he sits in a clearing and makes a bunch of phone calls to put things into action. And that's his way of processing thoughts. It doesn't matter what it is. Leaders should allow themselves space, though, and we don't do that. We do all of our thinking while doing something else in the background. Writing is great because you can't do it while doing anything else. But if it doesn't work for you, what you need to do is replicate the mechanism, not the activity.
I think there's a lot of ghostwriting that goes on as well. And my preference would be that, you can lead the horse to water, and you can, marketing team, PR team, whatever, can find those voices. And it doesn't have to be the CEO, but that top level of execs, find the ones that are comfortable with it, but they will produce their own content, because I think it comes across very clearly in certain larger orgs sometimes when it's being ghost written to me personally. So
somebody called me recently and asked me who's doing my writing and if I could recommend my ghostwriter. And I was like, how very dare you?
Yeah.
How dare you? First of all, have you not met me? I sound exactly how I write.
I've always been asked before, how do you have the time?
Oh, I hate that.
You just find time.
Well,
Right?
but no, it's more than that. I get asked that a lot, and it's pet peeve. You do it at the expense of something else.
Yeah, that's true.
And that's the only truth of it. And when people go, where do you get the time? The implicit thing is what, that you're not working as hard as them, or that you do it at the expense of something else: sleep, exercise, time with family, time with friends. It is a choice you make, and you sacrifice something. There is no other way. There are no shortcuts in life.
Yeah. So a couple of quick fire questions for you then. Just, I think we could talk for hours with you, to be honest. So insightful. Is there a future, first and foremost, where legacy banks and challengers converge, or will the divide get sharper?
I don't know is the answer to that. It depends what day you catch me on. There are days when I think that we're going to have full unbundling, and the idea of that full service, full stack, universal organization will not be profitable anymore because of changing regulation. And then I think, well, that will happen, but I don't know that I will be alive to see it. And actually, the next decade or so will be what you described, because the reality is the big engine in any organization is, are you a profitable going concern? It doesn't matter if you're sputtering here and losing a bit of momentum there. If you're an overall profitable going concern, then there's absolutely no reason or imperative for fundamental change. And so the answer is, short to medium term, I think we will see that divide grow. But we will, from the challenger side, we will need to be much more honest with ourselves about the business side of things.
What role will regulation play over the kind of next 5-10 years, do you think?
Huge, because the reality is, if you look at a map of the world and the hotspots where we've had successful challengers, there are places where the regulator chose to create an environment where capital adequacy requirements were different. There were sort of ways of having training wheels on from a regulatory perspective, and there was support. So the intent to even have them at all was a regulatory decision. And so the regulator will actually, I personally believe and hope, will lean in a lot more, because the reality is, with everything that's going on, consumer protection is a much more complicated notion than it used to be. And I mean, we haven't touched on AI, which I'm kind of grateful for because it's what everyone's talking
We
about.
thought we'd take a break from AI today.
Yeah.
It's
But the reality
fatigue.
is you have emergent regulation around that will actually change quite a lot of the dynamics of what we do. So the regulator will determine. We're not deterministic about outcomes, right? But because the regulators are a lot savvier about the art of the possible, the regulation will push. And let's face it, we're sitting in Europe having this conversation. Most of the real innovation we've had was because the regulator either made it possible or made it mandatory.
Mm. Perfect. No, great answers to both of those. So the final section, which we've obviously forewarned you about, is the hopefully becoming a little bit more famous shelf of shame.
Yeah.
We want you to nominate something. It can be banking, fintech, business in general. Put forward, and we'll vote on whether it makes the shelf or not.
Pink credit cards.
Pink,
I hate them.
Pink credit cards.
I find the idea of cards for ladies that are pink and are usually advertised on International Women's Day so 1950s, so pointless, so patronizing. Like, have a credit card
Is there a
that
bank
I can.
we're going to name and shame?
There's quite a few of them, actually. There's quite a few of them. Allow me the ability to personalize my card. I have leader rights on my Alica card. I quite like that. Allow me to personalize it, but don't. No, not pink. No pink. It's a gimmick. All gimmicks. Pink upsets me in particular. She says, sitting there in all black. But gimmicks in general annoy me, and pink cards annoy me the most.
I think we can put that on
I
there.
agree with
Yeah.
that. Absolutely. Perfect. Well, thank you so much for your time, Leda. You've been incredible. And we'll see you again soon on the Payment Share podcast.
Thank you for having me.
Thanks, Leda.